Good morning. It's Market Day Report. So glad you're with us to start a week. Now today, interesting because it's the final day of the month. So last day of the month. It's the last trading day of the quarter. It's also the last trading day of the first half of 2025. A couple of big reports coming from USDA. We'll get an annual acreage report plus a quarterly stocks report that's set to come out at 12 o'clock Eastern time. Big reports. We'll have them here for you today. First off, overnight trade action in the corn market. What happened? September down 3 1/4 at 408 1/4. We see the unchanged there on the front month July. December 424. Down 3 cents in the overnight session. Let's go to soybeans. Beans trading higher in the overnight session with November at 10.30 3/4, up 6 on the heels of a flash sell, not of soybeans, but of meal and cake. Meal overnight in lower territory. Soy oil moving higher. What about the wheat market? Well, the most active is September at 537.5, down 3 1/4. For hard red, September 2 1/2 lower, 531 3/4. And then spring wheat, December. We'll check on the December as it's not quite updated at this point. Now to the cotton market, December 68.94, down 38. Let's go to Springfield, Missouri. President, Midwest Market Solutions. Brian Hoops. All right, Brian, we start the day with a flash sell.
Yeah, you're right. You would hope that soybean meal is cheap enough now where some buyers would step in and start purchasing meal, and this will continue through the rest of the summer into our early stages of harvest of here in the United States. 204,000 metric tons sold to an unknown destination. And again, hopefully that's just the first of many purchases as meal is very cheap right now. Of course, big reports coming out today that will definitely impact trade direction going forward. There's going to be a surprise here. Nobody knows exactly what. I think the market is telling you that it expects to see a little bit more corn acres and a little bit less soybean acres than our March estimate, and less than what the trade expects. Actual trade guess is for an increase in soybean acres. So there may be some sort of surprise brewing there with soybeans trading higher overnight, anticipating that. But we'll see. It's historically has been a major market moving type report. And I think this report was going to give us some fireworks. Now, if we go through this report and we don't have a lot of surprises, we're looking at big corn acres, maybe a little bit larger soybean acres. And then you look at the growing conditions, at least through the mid part of July, now look nearly ideal. It's above normal precipitation along with above normal temperatures, giving us almost a greenhouse effect through most of the corn belt. There'll be certain pockets that have had some detrimental weather, but for the most part, it looks to be a very good growing conditions through mid-July. Of course, there's a lot of times we could get dry in last half of July or in August. That gives us a rally, but producers are really going to need to be defensive on any rallies that we get from now until really to harvest time frame, and make sure that they make some sales going into those if we get those rallies.
Hey, Brian, speaking of rallies, could the rally in the cattle market be nearing the end? That's a conversation we can pick up in just a moment. Market Day Report continues in a moment. Cash cattle last week, we actually saw higher prices develop on Friday afternoon, but in the South, 224, 226. In the North, 230 to 233, and then dress 368 to 372. Let's go to the live cattle market. This is how we settled on Friday, up 305. June contract, 224.75. That will expire today. And if we're talking 225, we're talking pretty much spot on with the cash. August, 213.60. That's up 440. Also, feeder cattle. Feeder cattle prices on Friday were higher. Front month August, 308.05, up 475. Every contract higher. And also, let's throw this in. That Teamsters Union in Amarillo, Texas, voting to strike at that Tyson plant. We'll have more on that throughout the morning. That could be a big development. Hog trade higher on July, August up a couple of pennies, 110.27. Let's go back to Missouri and Midwest Market Solutions. Brian Hoops, what are your thoughts here?
Yeah, that is our largest processing plant in the United States. So it would be a big deal if it does happen. Of course, the market on Friday heard that news and didn't really seem to care. It rallied sharply. June needed to align itself with the cash markets and did that on Friday. Now it can go off the board up in this area. But the rest of the contracts really soared higher. There's just too much of a discount that the deferred contracts are holding to those current cash markets, even though the cash has come down over the last 2 weeks. One thing that we've really noted is cutout values have continued to move higher. Select was over $5 higher last week. Choice gained about $1.50. That has put packer margins now, once at one time they were deeply in the red. Now they're deeply in the black, about $105 ahead on the positive side. And with the softer cash trade, higher cutouts, and if that happens again this week, I think you'll see more gains in those cutouts because of the slow kill on Friday. If the Tyson plant goes dark, that'll be even less kill. The boxes should continue to move higher. Once we get past 4th of July, though, demand usually starts to soften up. And so Packers have good margins. They don't want to spend it all at once, but I think they're going to be forced to pay higher in the cash markets in the coming weeks, at least the last half of July.
Yep, I think you're right there. Time will tell, so we'll keep an eye on what's happening in Amarillo. That could affect the market as well. Brian Hoops, Midwest Market Solutions.